Assalamualaikum. We are from Group 3, Paradise, and we want to present about Activity 3. And I will pass it to Afika to begin the presentation. Thank you.
Assalamualaikum and good evening, Dr. Hana. Today, my group will present our activity 3, What is wrong with you? So, we will discuss on recent issue related to 1MDB and KPMG. So, 1MDB is One Malaysia Development, Berhad, and KPMG is Private Marbit Dealer. So, I will explain briefly about the issue. One Malaysia Development and various subsidiaries has filed a lawsuit against KPMG, who worked as 1MDB auditors during the time. So the complaint was filed on 6 July. The action claimed negligence and breach of contract in the audit and certification of 1MDB financial account for the fiscal year ending March 31, 2010. So after refusing to sign off the FY13 account, KPMG was fired as an auditor. So according to the lawsuit, the plaintiffs claim that about 3.2 billion was taken from 1MDB and its subsidiaries, while KPMG was the auditor, the firm auditors. KPMG has agreed to pay a settlement of 80 million US dollar to resolve all the claims related to its fiduciary's duty in auditing the account of Malaysia Development 1MDB from 2010 to 2012. In the statement of Malaysia Ministry of Finance, said that the settlement will conclude the civil suit filed by the Malaysia government on July 6 against KPMG, which will expedite the payment of monies to fulfill 1MDB outstanding obligation and save the court time and public resources. So that's all from me. I will pass the next presenter. Thank you.
According to Malaysia auditor law, when the auditor detects any error, the auditor must immediately report it to the company. However, when the error or the problem is too serious, it should be reported immediately to the ROC as mentioned on the section 216 subsection 8. When the auditor files a report, this will be an offense by auditor which will fall under section 266 subsection 13. And section 260 subsection 8, if an auditor in this course of performance of his duties as auditor of company is satisfied that A. There has been a breach or non-observance of any of the provision of this act, and the circumstances are such that in his opinion the matter to the notice of the director of the company, or if the company is a subsidiary of the director of its holding company, and he shall forthwith report the matter in writing to the registrar. That's my part. I'll pass it to the next presenter.
Good morning, Hannah ma'am and my dear classmates. So I will be discussing on what are the laws that the auditor has breached in this particular case that we have selected. So for any auditor of a company, there are certain duties that he is bound to be taking care of under the Companies Act of 2016. So specifically, the auditors have a duty under section 266, subsection 9, if it is a public company, to report to the ROC, the Registrar of Companies, for any fraud or dishonesty that they have found during the course of the audit. Now, a very similar section 266 subsection 8 for companies which are not public companies, there also the auditors have a duty to report to the ROC the error and discrepancies that they have found. Now, it is understood that this duties of the auditor, if not taken care, would be considered as breach of the law. This breach can tantamount to certain fines and imprisonment as stipulated in the Companies Act under section 266 subsection 3. So here, the failure to report this offense can lead to an imprisonment up to 5 years or a fine of 3 million ringgits or combined with both. Now, the auditor has something called as duty of care, or the auditors are supposed to be not negligent Now, what is duty of care and not negligent? Not negligent means anybody of the same professional standing, which means any auditor, a prudent auditor would do that this particular auditor should also be doing, like looking at the financial statement, looking at the vouchers, the supporting documents, the financials, the transaction, everything with the level of professionalism and professional knowledge as of any other auditor in the same field. Now, the breach of duty to care and being negligent is specifically the case that happened in this particular case that happened. So because the auditor was negligent, they could not identify certain fraud that the company committed, especially involving the top level management also. Because of this particular negligence, this particular audit firm is going to be sued. So the reason the person is going to be charged under this section is because of negligence and not taking enough fiduciary duties towards this audit. So that is all from my part. I will pass on to the next auditor now. Thank you.
Okay, next I will continue with what section will be given if KPMG found guilty. If KPMG failed to discharge its duty and responsibility as the auditor of one MDB, it means KPMG is liable for negligence and breach of duty of care. According to section 266(30), any auditor who contravenes subsection 8 or 9 commit an offence and shall on conviction be able to imprisonment to term not exceeding 5 years or to a fine not exceeding 3 million ringgit or to both. Okay, that's all from me. Next, I will pass to next presenter. Thank you.
Thank you, Najiha. My name is Farah Farzana bint Abdul Salam with metric number 20250. Now, let me continue to the next part, which is what is KPMG supposed to do to prevent these charges against them, which consists the suit alleged breaches of contract and negligence in the audit and certifications of one MDB's financial statements for financial year March 31, and KPMG is liable for negligence and breach of duty of care. So to prevent this, KPMG should act in accordance with the law as stated in Power of Duties, which is the first one is Section 266, subsection 4, right of access to accounting records. Second, Section 266, subsection 5, clause B, right to obtain information and explanation from officers of the company. Thirdly, Section 266, subsection 6, right to have the auditor's report take or endorse on the financial statement. In this case, we can refer to the example of the firm, which is KPMG. They are retracting its 1MDB audit reports in 2018 because it did not have access to relevant documents declassified by the Mahathir Mohamad administration, according to a statement issued by 1MDB that year. And the last one, fourth, Section 266, subsection 7 is right to attend the general meeting. I think that's all from me. I will pass to Amalina to talk about what a young auditor or secretary could learn from this case. Thank you.
Good evening. My name is Nur Amalina. My matrix number 201182. So I will present about what a young editor or secretary could learn from the case. The main lesson that a young editor or secretary could learn is they should learn to avoid making negligence in performing his duty as auditor. According to section 266 bracket 1, every auditor of a company shall report to members of the financial statement and on the company's accounting and on other records relating to those financial statements. Based on the news writes that A proper audit by KPMG would have identified fraud risk warning signs which the firm would have a duty to report and which would have to lead to the discovery of the fraud at 1 MDB sooner, said the plaintiff. So the auditor must report it to the members of the company when the auditor detects errors and discrepancy in the company's account under section 266 bracket 8. The auditors must report the ROC to the ROC if the errors and discrepancies are too serious, to the extent that the errors contravene with the provision in Companies Act 2016, the errors could not be corrected. Even the errors are brought to the director. For example, the auditor have found the money of the company had been misappropriated by the director, which contravene with section 218 bracket 1 bracket A. This failure, if this fail to report is this is fail, so the failure to report is an offence that would be liable for 2 years in prison or 30,000 ringgit fine of both under section 266 bracket 13. In addition to that, the auditor of a public company must report to the ROC if a serious offence involving fraud or dishonesty is made against the company under section 266 bracket 9. So the young auditor should learn must not act beyond their power and duties to avoid any punishment. That's all from us. Thank you.